Hey everybody, so in this video we're going to talk about historical PE of SPY ETF and S&P 500. If you're just looking at this chart right here, I went ahead and grabbed 90 years of historical PE data. Now the data is all on the left side right here, so I can just scroll through it just to show you guys that I actually collected 90 years worth of data. So the one thing that I do have to mention is that I eliminated some of 2008 and 2009 data. So let's just scroll down to that area. Now the reason being because for 2008 and 2009, there was some PE multiples that were going over 100. So I just decided to eliminate that so that we don't have massive outliers in our data. So there are some data points that are missing here. So I just completely removed that just to smooth things out a little bit. But I did keep 2001 data, so the dot-com era. So when I do go ahead and average all of this out, you guys can see this bottom line. The average PE ratio is 16.64. If I round that up, that's 16.65. So here, going back to this chart, this orange line is essentially the average PE ratio, which is 16.65. And then you guys can see right about now, it's saying that as of 4-1, this is sitting at 20.83, but 4-1 is a while ago. That's April. So I went ahead and grabbed more recent data right here. So this is straight from the NASDAQ website. It's saying that earnings per share for the S&P 500 is 206.38. So what I went ahead and did was I got the current S&P 500 price, which is 3,924 and 26 cents, and I divided that by the current S&P 500 earnings per share of 206.38. So that gives me a current PE of 1901. So based off of today's earnings per share, we should be paying about 3,436.22 for the S&P 500, which translates to around 343 on SPY. So that is a lot of data that I just threw at you guys, but that's kind of giving us an an idea of what the average price should be for SPY based off of historical PE. So keep in mind that this earnings per share number, it can change. So after a slew of earnings, this 206.38, that could actually go down if it wanted to, or it could go up. So just keep that in mind that this number can change right here. So just based off of today's earnings per share, I'm saying that looking back in history, 343 is probably around the area that we should be paying. So I want to make that very clear. I'm not saying that you should go out and buy this. What I'm saying is based off of this data right here, that 343 is a reasonable price based off of today's data. So now let's go ahead. Let's look at the S&P 500 chart. I do want to point out a lot of different zones. So I'm mainly looking at 5 different zones here. So the first zone that I'm looking at is where we hit the most recent high, which is right around 430 to this 413.18 area. So as you guys can see, this is kind of where we pivoted and rejected back here in May. So that's zone number 1 that I'm looking at. Now zone number 2 is this area under 413, but also above this longer term trend line. So now if you see this longer term trend line right here, this guy right here, you can see that it's going back several years. So it's got a lot of history to it. So that is approximately, if we're looking at where we are right now, it's approximately like 394 to 413. And then this third zone, which I do happen to think is one of the most important zones, is this area between these two trend lines. So let me just zoom out again so you guys can see how much data these two trend lines are actually accumulating. So let me just go back in time. You guys can see that all of this price action is bouncing back and forth between these two trend lines. So that is essentially where we're trying to get into right now. You guys can see with the most recent price action, we are within this trend channel. So if we're looking at where we are right now, this trend channel could go all the way from around 395 to around 370-ish. So keep in mind this trend channel is going up. So the further in time we do go out, the further price action will move up within this trend channel if we are within it. So time is on our side here for this. Now the fourth zone I'm looking at is everything underneath this trend channel and this strong support, which is this pivot zone. So let me explain to you guys why that is a strong area. So if we're just looking right here, here was the old pre-pandemic high before we fell off this cliff. Now, when we rallied back up, we broke back above that, and then we went back and we retested that area. And then we chopped around for a little bit, and then we finally broke out and we saw these all-time highs. Now, let me go ahead. Let's introduce the moving averages. If you look, you see this area is coinciding with the 200 moving average on the weekly time frame. So that is why it's very important. So this zone can literally go from, the bottom of this trend line to this 349.16 area. So if we're just looking at where we are right now, that could literally be from like 370 to 349. Keep in mind that this is moving up. So let's say that we go over to November, here in November, if we're drawing our point from here, we're looking at 376 to 349. So that's the fourth zone. Now the fifth zone is kind of where I think if we do see some capitulation, this is where we could enter. Now that would be breaking underneath that 200 weekly time frame, and then we would enter this next zone, which was this prior zone that we were in when we saw this chop after coming out of this pandemic rally. So here we saw this chop, and then we saw this massive rally. So I do believe if we break underneath that 200 weekly moving average, let me introduce it again. So if we break underneath this red line, I believe we could be moving within this 350 to 314 zone. So that's coinciding with this price action right here. And then this is where I think we could see full-blown capitulation, is if we fall underneath this 314.36 zone, then I believe, price action could go all the way down here to potentially 262.47. So let's just go ahead. Let's remove these moving averages again. And let's just look at the percentage from the top. So with this line right here, pretty close to where we are right now, we're about 18.3% from the top. Now, if we're looking at this 350 pivot zone, I'm thinking, we're about 26.7% from the top. Now, if we make it all the way back down to this old range right here, the bottom of this old range, which is right around 314.36, we're about 34% from the top. Now, if we do see that full-blown capitulation, which I do think could be possible just depending on the geopolitical news, then I think we could hit all the way as low as 262.47, which is 45% from the top. Now, I'm not saying that this is highly likely. I'm just saying, if we do see that full-blown capitulation, do be aware of these zones. So especially this zone right here and this zone right there for full-blown capitulation. Now, what I do think is a little bit more likely is maybe we chop around between this trend channel. And then, when we do start breaking underneath this trend channel, that's when I do think we could see that 200 weekly moving average. So if we do break below that 200 weekly moving average, that is when I would expect things to literally break down, and when we see that capitulation is when we break underneath that 200 weekly. So I hope you guys enjoyed this video, and keep in mind, this is not financial advice. So whatever I said in this video, I'm not telling you to go ahead and buy at these prices. I'm just saying, hey, you know what? This might be some zones that you got to watch out for. So hope you guys enjoyed this video. If you did, like, subscribe, and have a great day.